How we doing, traders out there? Welcome back to Stock Market Movers. And wouldn't you know it, the stock market looks almost unchanged right now at this moment, but definitely red on the day. But coming back right now, it's at 375.50, making a little bit of a turnaround. We'll talk a little bit about that coming on up. Here is the topics for today's show. Let's talk a little bit about them. We're going to get into the ISM Service Index. We'll also be doing the ADP private payrolls today. So we'll take a look at the economic data that came out. We got OPEC production cuts that hit, oil prices going up, Twitter and Elon. We'll get into AutoZone, Helen of Troy earnings, Ford with a rating call out there, and overall stock market sentiment outlook. I even got some comments that I stole from CNBC, but I'm just borrowing it. I'll give it, I can give it back to them. It's from our friend, Sam Stovall at CFRA Research. I'll talk about that coming on up near the end of the show. And today we got our guest today. We got Luis Cordone, Senior Vice President at Data Strategy of AST. And so we'll see what happens today. We're going to talk a little bit about what's going on in the market with Luis coming up at 1:15. We'll see what happens there. Let's keep going. Let's get into it. Stock Market Movers. I'm your host, Money Mitch, and let's get started. There are three ways to make a living in this business. Be first, be smarter, or cheat. I can't help you cheat, but I can give you the informational edge to help you succeed in the markets. Welcome to Stock Market Movers. All the market moving headlines and expert opinions every day. They say money is the oxygen of capitalism, and I want to breathe more than any man alive. All right, let's get into it. Let's take a look at the economic that's out there, the economic data that came out. First one we're going to get into is ADP, private payrolls coming in here. And let's take a look at the overall market. Let me get my shares on up here. There we go. You guys are seeing the overall market catching a little bit of a bounce right now on the hourly. Look at the 15-minute. Look at that bounce. Something happened there at 12:15, getting that nice little boost back on up. And that's just how it goes sometimes. Sometimes you could get washed out at the early part of the action. Next thing you know, the rally's back on up. And that seems like that's what we're getting today. And it just goes to show you how much nobody knows where this market is heading to right now. And it's hard. It's hard to trade this one. ADP private payroll report came in, added 208,000 jobs for the month of September. That number better than 200,000 from the Dow Jones estimate, and definitely giving a little bit of a lift, right? What it shows us is that at least we're adding jobs faster pace than we were, which is a good thing because eventually we need to work our way through those jobs that are available and then see what happens to the unemployment number. That's what I'm paying attention to. Now let's go to the next economic data that came out, which was September's ISM Service Index, registered at 56.7 reading, indicating levels of companies reporting expansion for the month. Employment rose 2.8% to 53%, while price index fell 2.8 points to 68.7. So the estimated reading here was at 56%. And so the report was slightly better than expectations and just below the August reading. Now, let's get out of that talk. Now, of course, a lot of eyes were on some oil stocks today, and I'm going to go ahead and show you guys this. Look at the move that ExxonMobil put in today. And the OPEC Plus coming on in, and wouldn't you know it, they actually did the cuts and to the high side of the range. I'll give you guys the information here. Let's talk about OPEC Plus making this decision to reduce production by 2 million barrels per day for November. Estimates on the cuts for OPEC Plus were to impose cuts somewhere between 500,000 barrels and 2 million barrels. And you can see they chose the high end of this estimate. US WTI futures were at 87.37, almost a 1% higher move, as you're seeing oil definitely continue the move that it's been putting in the last couple of days and really getting that lift here in these oil names. Now Biden is stepping on in here and doing what he's done before to try to bring the oil prices down. And of course, he's trying to do this right at the time of the midterms. And wouldn't you know it, Biden coming on in here saying that he's directed the Department of Energy to release another 10 million barrels from the Strategic Petroleum Reserve next month. So what is he trying to do? He's just trying to fight back on what's going on with those 2 million a barrel cuts. So if he's able to fight back, then he keeps prices where they are. And so here's the battle. We released a massive amount before. Of course, we don't have much more in the Strategic Petroleum Reserve because he's releasing this all out in the past. Now he's going towards it again. Eventually, he's going to have no ammo there to go to. It's the question that you start asking yourself. Will prices in oil rally back to over 100 a barrel? Could definitely be in the works. XOM definitely getting some lift today. You guys can take a look at Oxy getting a nice little push on up. And another one that I traded today, full disclosure, fully out of the trade, but MRO. Look at that move today. What a beautiful move back up through the 27. Caught that dip today and was able to ride it up for a nice little win. And MRO continuing a little bit of a push. You guys can also take a look at maybe some of the refineries, right? And the equipment services. Look at Slum getting that nice little push on up. The oil and gas equipment getting that push that we're seeing here as oil continues to take another step up today, all on the OPEC news. And it seems like there's a battle now. OPEC is worried more about the price to continue kind of, milking these high prices versus how the U.S. is referring it to, how we're looking to try to make it easier on consumers. At least that's what the U.S. is fighting for. But it seems like OPEC's mind is focused not on what's going on with the supply cuts that are coming from Russia, but more on the price of oil so that they can continue making their money. We'll see what happens there, and will we get a rally back to over $100 a barrel? It's something to keep on watch. We also got today some home numbers, right? Some mortgage application numbers, and they didn't come in, at least leaning into any other direction than what we've seen recently. And so the 30-year fixed mortgage conforming loan balances were at 647,200 or less, an increase to 6.75% versus 6.52 where it just was. Mortgage applications for purchasing homes fell 13% for the week and were 37% down year over year, and just showing more and more how we're seeing this housing market really deteriorate. Let's take a look at how some of these stocks were doing on the day. Lennar getting hit down and now bouncing back with the overall market. ITV, similar. I just look at this ETF, and I've been seeing the REITs definitely get hit hard today. And you can see it here. From the open, it's still our leading sector down today. It's down about 1.7%. Overall, near 3% down. And a lot of these are getting hit hard. Where is it getting the worst? Well, right now, it seems like the REITs in office space are just getting wrecked. A lot of this could be kind of, the higher, bigger cities like New York City having problems in getting offices filled. And it just seems like the REITs, at least in office, are definitely struggling more than the others right now. We'll see what happens if it shows up also in the home construction. And that's why I was talking about those mortgage applications. We'll see what we get from there. Yesterday, we did get the JOLTS number that gave us a little bit of a lift, and that was because it totaled at 10.05, coming in with the ADP number that shows us more and more how the private payrolls are still adding jobs. The big thing for us is, will the unemployment rate actually change, right? Because the Fed has been mentioning that multiple times as one of their ways of looking to see if the economy is still strong. And we're still not seeing that kind of spike in unemployment, something to keep our eyes on. The first moment that it actually shows up, that's going to be something definitely to notice. We'll see what happens there. All right, getting out of the talk on, of course, the REITs and what I'm seeing in the home industries. Let's go towards quick headline here before we get into our first interview. Let's do the AutoZone authorization today. So that's AZO. AutoZone getting some lift today as they announced an additional 2.5 billion share buyback plan. And this looked good. I was talking about the daily, how I was looking for a nice little push back up into this gap zone. And look at that. Nice little gap zone you're looking to try to fill on up on AZO. And of course, in a recessionary time, you're probably going to choose to fix your vehicle versus buying a new one, right? And I think that this is going to continue to kind of affect this story. We'll see if it can make a move back up towards the high of the 52-week high towards 2,362. That's where I could see it going, as I kind of pointed out in the pre-market prep that I was looking at these drives, and you can see the drives that this stock has had recently. It has had about 3 strong drives, couple pullbacks. Let's see if these next drive can really get it through that recent high and keep it pushing. AutoZone. If you look back in time, man, this is a nice linear move since 2021. All right, getting out of the AutoZone talk, let's go into our first interview today. Like always, one of the things that I want to do is get to the expert opinions to keep you guys in the informational edge. There's one thing I can look here and to the left and kind of point some red flags where I see it. But of course, there's nothing better than getting to expert opinions. So let's go ahead. Let's get into our first interview today. All right, I got Luis Cordone. This is Senior Vice President of Data Strategy at AST. How are we doing today?
Doing well, Mitch. You're doing well. How are you?
I like the sweater. I like it. Looking good. Let's get into the market talk. It looks like the market just bouncing around. First thing, just overall market. How do you feel about the sentiment?
Well, I mean, it's it bouncing around, right? But the overall sentiment, when we think about it over kind of the bigger picture here, is valuations are down, and corporations and companies are a little spooked by that when they think out towards shareholder activism. So there's a couple of headwinds coming their way, and those concerns are really based on those lower valuations.
Yeah, it seems like recently we've really run into the wall with kind of climate control, different activism that you're seeing out there. So tell us a little bit about some recent changes that even are going on in the SEC that are really starting to bring up more concern about what's going on with these activists and shareholder control, right? I mean, at the end of the day, majority of the times you're looking at companies to try to just return the most to their shareholders. So what's going on here, Luis?
Yeah, so it's a little bit of a perfect storm from a company standpoint and the risk of shareholder activity or shareholder activist activity. There's a recent change that was implemented earlier this month or earlier last month, which allows shareholder activists to nominate candidates on a single ballot. So in the past, activists would have to submit a separate ballot, separate from management. So there were 2 ballots that shareholders voted on. The new rule allows for a single ballot, the same ballot that the management pushes through. So the concern here is that it's making it a little bit easier to get these names in front of the shareholders. And in a sense, investors or companies are concerned that there's going to be a potential for these activists to get their directors, their nominees, elected on the board. Now, the bigger issue that they're seeing is that it's just coming at a really bad time for companies. And that's that perfect storm. The first part of the storm was regulation change. Second part is the valuations are down. So companies are at a point right now where the stock prices are suppressed. And it's mostly because the capital flows are moving away from equity into the short-term cash and cash-like assets. And that's really engineered, right, by the Fed. Fed's trying to take money out, trying to cool the economy down, take money out of the equity markets. But that's really wreaking some havoc on the stock prices of these companies. The final bit that really makes it hard for these companies to get their arms around this is that they actually have strong balance sheets. We go earnings to earnings, especially into 2022. The theme is lots of cash. These companies do have a lot of cash and they're sitting on that cash, but they're preparing that cash as a war chest for the future recession. Activists want that cash returned back to the shareholders. Shareholder valuations are down. they will push a story, they will push negative sentiment against management saying that that money needs to be deployed back to the investors. You need to increase shareholder value with that money. They shouldn't just be sitting on that cash. So that's a driving concern that corporations have coming into next year's AGM proxy season. And this is the time, the fourth quarter is the time when the activists will start making their shareholder proposals and making some noise.
Now, some companies are taking steps to protect themselves from shareholder activism. What can they be doing?
Some of it's a preemptive strike. I mean, some of it is corporate actions, right? They will go and maybe spend some of that, maybe return some of that, increase dividends, maybe implement a buyback. So these are things that they're doing that they know that an activist might come up and say, hey, you need to do this. So they're making a preemptive strike, looking to spend some of that cash. Other companies are looking around themselves and they're looking to do some mergers and acquisitions. So rather than just sit on all that cash, they're looking to take a corporate action, invest that cash back into the company, and hopefully, set off or make the activists look someplace else, right? Look at a company who may not be deploying their cash.
And why would these activists really try to work themselves on the board? What is that going to give them control over?
Well, they want the voting power, right? And they want to be able to help guide the decisions of the company, right? So the primary decision is don't sit on this cash in this particular case, right? Sometimes the activists will actually get on the board and look to push the sale of a company. So anything that really kind of disrupts management, anything that says the current management's not doing the correct process, and these activists say we can do it better, that's why they want to sit on that board. So they can put those proposals out, they can make those decisions, and they can change the nature of the company.
What I would say here is who wins and who loses in these situations? Do you feel the average retail investor, is this a good thing for the average retail investor?
So it's a good question, right? It always depends on the company and the target and actually what is happening here, right? In the end, shareholder value, investors want shareholder value. So you can see why the argument from the activist is compelling. On the other side of it, management will say, look, during a time like this, where the shareholder value is being decreased due to market conditions, less about what we're doing on the management side, and we're just trying to kind of keep it steady, hold the pace over the long term, the management will say, look, you need to give us a little bit more time. The markets will turn around, but the company's doing everything that they need to do to keep the company valuable. And that's evidence in the balance sheets. So it really makes for a decision. It's not so much who wins, who loses. It really makes for a hard decision for retail investors, even all the way up to institutional investors.
Now let's pivot a little bit here towards what we recently went through and kind of the 2020, 2021. We had that kind of like SPAC bubble, IPO bubble really come out. And it feels like we're really coming to the end of an era of free money. How do you feel that this will affect kind of IPOs and SPACs moving forward?
Yeah, that's a good question. I mean, those markets really depend on a lot of cash in the market, and the Fed has made it known, being as hawkish as they are, we're going to take that cash out. So that's really what's happening is follow the money. That's what we're doing here is we're looking at the investors, we're looking at where they're shifting. And what we see in the short term is that they've actually shifted and moved towards cash and cash-like assets, short-term treasuries, looking to get some sort of return on the cash while trying to preserve their cash. Now, the question is, what happens over these next 3 months to 6 months? Does the cash-like assets become an actual investment strategy where they're going to sit in these cash securities for a long period of time? The thought is generally when investors move the cash is that they're just getting ready to redeploy it someplace else. But these cash accounts have been sitting there for a while and they've been still attracting all that equity money. So the question is, will that cash go back to the equity markets or will it just continue to sit in these accounts? And as interest rates creep up, it makes an argument to keep this money in these cash accounts.
Yeah, I mean, it was for a long time where we had no alternative, right? I mean, there really was no alternative to try to get yields. And it feels like we're getting into a different time where there's yields elsewhere outside of the stock market. So it's going to be an interesting dynamic to definitely keep watch. Thank you for joining me today, Luis Cardone. Tell me a little bit more about AST, because I think that a lot of investors might need to kind of hear about AST. Tell us about that before you get out of here.
Sure, absolutely. AST. So we are a transfer agent, and what we do is we sit on the registered investors' books. So we manage the shareholders for all of our publicly listed companies. But we do a little bit more than just kind of sit and be a bookkeeper. What we're doing is we're analyzing the ownership information, and we're helping companies make decisions during their life cycle, right? So if you think about a company, they have to move through a certain period of time throughout the year, and then as years build on. So as they move from IPO all the way through mature large cap company, they have to make decisions along the way. So as their transfer agent, we're partnering with them, looking at their ownership information and reporting to them from a strategic standpoint, telling them, hey, this is what your investor base looks like. They're going to expect certain things out of you, right? And then as they make their decisions, we'll follow in real time. Markets are dynamic, investors are changing. We'll follow how those investors are changing, and we'll report that to them. And then finally, we'll also measure that information. So when those corporate actions happen, right? Mergers, acquisitions, tender offers, annual general meeting of shareholders, when every time these events happen throughout the life cycle, our reports, our analysis will help them understand how effective it was. So we really are a partner with issuers, and we work for almost 3,000 publicly listed companies.
Well, anybody that's battling for the shareholders is good by me. So I appreciate you coming on today. We'll definitely have you back on, and we'll keep watch to see what happens with the shareholder activism. Thank you for coming on. All right, that's going to do it for our interview today. And it looks like the market just doesn't want to give up today. It said, hold on, you want to swing the dollar back down? We can go up. And so it looks like I just took a look at the dollar index, and the dollar index starting to come down. We've talked about that today, how we wanted to really keep a close eye on the bonds market and, of course, the dollars, as we're starting to just continue to use this as kind of a sign to see what happens here. So earlier in the day, I saw the 10-year get towards 3.79, now at 3.77, starting to decline also. I think you keep an eye out also on that dollar. What happens now? Do we get another kind of push? It turned around there around 1024. And if you take a look here around 1030, we started going sideways in the SPY, then got that next push back around the 1130 as we're really starting to get that little push. Now I'm going to go ahead and look to see if we can get through the resistance, because we do have some resistance above around the 378 level, 377 level. We'll see if we can get through that level now and take it up there towards the 380s, as we were calling maybe a potential move of a 50% retracement from the recent move down. We'll see what happens here. That'd be a pretty decent move, as we can see that it would be a move back towards around the 384 level. And the bulls taking recontrol as soon as they saw that dollar index start coming back down. They drove it back up. We're going to go ahead and see if this can continue. One thing to note also, there was a point in the day that my whole sector outlook was in the red, right? And so the SPY is trying to come back on up through these levels, through the 378. If you look at the energy overall, this looks very similar to SPY. So it's kind of interesting to note this. But look at technology, also get a little bit of a spike in this. What is kind of leading that? Well, the semis still having pretty decent time lately. If you take a look, NVIDIA's in the red, but it's coming back fast and trying to get back towards that resistance. TSM up 2.5% today. AVGO, TXN, definitely getting some lift there. Qualcomm up about 1.8. AMD still in the red a little bit on the day, but you can tell these stocks are trying to come back on the day, and a lot of this is the overall action in the market, catching the bounce right around the danger level through that 370 back into that hourly range. It goes and catches that bounce, pushing right back up. We'll see what happens. It could very much end the day, unchanged, but we'll see. We're definitely getting some lift here. It got towards the 377.54. 378 will really be that next level where we can get the nice push. We'll see what happens there on the SPY. All right, let's keep taking a look here. Let's go towards the headlines. I do want to get into what was hot and what was not, but let's go towards the headlines that are out there. Of course, everybody's talking about Twitter today. So let's get through that headline. It actually hit the tape yesterday while we were here. Let's talk a little bit about that. So let's take a look at what Twitter is doing on the day. It looks like it's trying to come back towards the high. Got a little bit of a spike there at 12:15 also. Let's see if it can get through 52. Maybe it gets to that 54.20 eventually. I think you still have room to maybe playing that up there towards that level. Let's talk about what happened. So Tesla's CEO, Elon Musk, changed course and agreed to buy Twitter for the agreed upon price of 54.20. Now you see him putting out some tweets. He put out a tweet this morning saying that he's buying Twitter and that is an accelerant to creating X, the everything app. And so you're going to start hearing more and more talk of super apps. What are super apps? They're just a way of describing an app that acts as a one-stop shop for all your mobile needs. What do we mean by that? So let's say if you can open an app and you can, buy products like an e-commerce site, like let's say like Amazon. You could order a vehicle like maybe an Uber all in one site, right? That's now you have transportation. And maybe you add like this social media aspects or maybe messaging aspects. And now you have about 4 different features or 4 different things that the app can do, right? It can do some e-commerce. It can do some messaging. It can do right here, social media. And it could also do some transportation. Who knows? Maybe we add some other features. This is what you're starting to see. And this is what he means by creating the X, the everything app. We'll see. Who knows? Maybe it can go hand in hand in the long run with Tesla. Maybe it's a robo-taxi kind of look. Not sure that he can get it to there, but hey, I know that our Tesla fans usually are dreamers, and we know how Elon is a dreamer. So I can't blame him on having a big outlook on what he wants to do with Twitter. Let's just see if he can accomplish it. Twitter up there towards almost 52 today. Let's take a look at Tesla. Tesla got beaten down yesterday as soon as this news report came out. It got beaten down again today, going towards a low of 233.27 and definitely getting hit hard. Now it's trying to hold the VWAP, so let's see if it can get back at least and get towards a green day on the daily. But this is not a good look because if it breaks through this 241 and really closes down here towards the 230, we could easily be right back down there towards the June low of 206. And then we start worrying about Tesla as it starts breaking major support. We'll see what happens there in Tesla. Let me know what you guys think about super apps, if they're going to be coming out, if you guys think this is even something to keep on watch. But definitely, Tesla, what is going on? Looks like they did not like that you got Twitter because it looks like Tesla investors are worried that the focus won't be to improve Tesla. All right, let's keep going. We need a viable replacement for TikTok. Yeah, JRP, honestly, we probably do need that viable replacement for TikTok. But the truth is, TikTok seems like it's not going away. It fought every kind of battle in the data situation, and it's hanging on right now and really changing things up. All right, let's go towards the next one, which is going to be an earnings stock. Helen of Troy giving some earnings today. That's HELE. And look at this makeup. This is a good sign for the market today as this stock got beaten down, and it had a beat and a beat. It really wasn't too bad. Where they went wrong is in their guidance. So they beat on EPS, they beat on their sales, and then when they gave their guidance, they guided down here from an adjusted EPS guidance for full year 23 of maximum $10.35, bringing it down to a maximum of $9.40. And they cut their full year 23 sales guidance from a maximum of $2.2 billion to now $2.05 billion. So just really bringing down those top end numbers, also the bottom end number, but just shows how much they're struggling there and their inventory issues. But looks like it got shrugged off because it's actually higher than the close yesterday. And this is just how it can happen sometimes. Even though the story was horrible earnings, horrible guidance, they didn't care today. They got it going back again. And it's right back up there towards the 105.10s. Is this kind of more of a rip to sell? Yeah, very much could be, as we are getting a little bit of a push back. But look at the volume jump. This jumped massively today, up there towards 1.6 million, when on average it trades about 243,000 shares. All right, let's go to Ford out there. Let's take a look at Ford. Ford is trying to make its move. And of course, Ford did get some rating here. Morgan Stanley upgrading Ford to overweight, announcing a $14 price target. We gave this kind of shadow zone on the 4th and looking for it to get in there. And we got up there, right? We got a little bit of a spike. It was there early on in the pre-market. It got up there. Let's see if it can get back up there. That's a little bit of a gap zone to see if it can really just drive through that. That's a move to 1275. Will we get that on the day? Right now we're around 1244s. Needs to really get that drive through there to continue towards that price target of 14 that they gave. All right, in the chat, definitely if there's something that catches your radar, go ahead and let me know, guys. I'm going to go ahead and get into some comments here that I pulled from Sam Stovall, CFRA's Chief Investment Strategy. He was on CNBC's Squawk on the Street. And if you guys know, we always have Sam Stovall at least once a month, and he's definitely one of my favorite analysts to keep watch on. So he gave some comments today about the overall market that I think you guys would like to catch. He said that 5 of the last bear markets since 1950 ended in October. He also stated that I still think that we have ways to go. We're down 25%, but bear markets with recessions usually decline about 35%. And do so over a 15-month period. While we do have these relief rallies, we are likely to continue in a downward mode probably until the first quarter of next year. He also gave the outlook that if we're going to pull back 35%, that'd be a move towards 3,200. And so that's where he's taking his outlook on the bottom. He's taking it all the way down there towards that 320s there on the SPY. We'll see if we ever get cracked through that 357. That's going to be the first level to watch, but I can't blame him on the outlook of still pointing towards the downside until the first quarter of next year. This is very similar in the way I feel. I think at the end of the day, there will be a pivot, but it's going to take a while to show up in the inflation data that inflation is truly coming down. I think when do we get that data to really start showing up? Well, it's going to be closer towards 6 months after we saw oil stocks really kind of peak. And you can just use kind of XOM as that level, right? And so when did that happen? Well, it happened in June. So where do I expect to really see kind of that really start showing up? In December. So 6 months after June is when I would expect to start seeing that inflation data truly coming into the data and getting that hit down. So in December, going into the first quarter of the next year is really where I think we eventually have our bottoming moment. But like always, nobody knows. So we just got to keep on watch. All right, let's keep going. We'll take a look at what's moving out there. If you guys have anything on your radar, throw it on up. Let's go to what was hot and what was not today. And I put it up into the chat. That's interesting. But let's go towards what was hot and what was not. Let's take a look. All right, this is where we go ahead and see what moved on the day. So energy definitely leading us up. It's up about 1.95 on the day, 1.93 on the day, and really starting to drive back. As we can take a look at the sector overall, look how this is really starting to drive. Now we're really starting to see that kind of push. The real question will be, will we get a nice little breakout? You can draw kind of a trend line on the sector for me here. I'm going to be looking to see if we can get back on through here, make our way into this zone, And this would not be good for inflation. If oil is going to ramp up again, guess what's going to happen to inflation? It's going to go back up. And that's what we can't deal with. Once again, why the Fed is trying to fight inflation. Too many people thinking that they're going to pivot. This is the exact thing they're trying to avoid. They're trying to knock down prices far enough down that if for any reason there would still be a spike in oil, we're not going to get this massive respike in inflation because they can't turn it around once they slow down. So I think this is definitely something to keep on watch. What happens in oil is going to determine a lot of what happens in the Fed. And overall, what happens with the energy inflation is going to be a big determinant if the Fed can even think about pivoting. All right, let's keep going in what was hot and what was not. Of course, if you took a look at some of those names, XOM now to 99.7. Wow, this is not good, guys. This is not good for prices overall. If we keep ripping like we're doing today, in the long run, it's not going to be a good outlook. Oxy up there now to 67.92, looking like it's trying to come back towards the high. I remember when I got stopped out on that recent turn at 64.50s to 64. Should have been looking at those 58s because, man, what a move from the recent buy of Warren Buffett. 16.52% up from that move. Not a bad move there in Oxy today at all. And it's not just one of these, right? It's a lot of the big boys really getting some lift. We could definitely start looking at some different names. If you never looked at these before, I would keep an eye out on like an EOG, looking for a move back above 128. We'll see what happens out there. MRO now up to 27.20. Man, wish I would have held a little piece of that today. But I like to usually go flat in my day trading. If I was going to swing trade this, it would make sense, but not a bad trade there. And MRO today getting back up above the 27. You can also look at different plays here, right? You got Halliburton. You got so many names that you guys can be looking at in here. There's a lot of different plays, even the smaller plays. I feel eventually will get some rip, like the INDOs, the BORR, the board drilling. We'll see what happens on these. They're definitely pushing up today. PTEN, oil gas drilling names, getting some lift. All right, what's going on out there? I see you guys in the chat. Ravi Quantum wants to talk about some stocks. Crypto, I'll take a look at some of those. And Chewy, not bad. Only dip I'm buying is in energy, Jay says. I can't blame you for that, Jay. Like today, did our BTU come back? Yes, it did. Yes, it did. Cole not having a bad day there. CEIX, the one that I was looking at. I'll give it to you, Jay. You were looking at BTU. It actually still had the best day. 4.16%. Nice little pullback. Hourly fill. Tried to come back into that shadow. Didn't get back to it. Got close to yesterday's low, 25.44. Today, 25.51. Today to the left, 25.60. So it looks like it held those lows right there. Now it's starting to push towards the next level. AMR, one that I'm looking to get into the green today as it's starting to push back, getting a nice little lift right now. Another one to keep on watch. METC, talked about it today for a move back above 10. Not a bad play there from the 980s towards the 10. It's been a good day there for coal. And that's the only thing up, right? Or paper products, not too bad there. And one of these is really kind of leading the way here. This probably be this SLVM. I don't know this paper and product stock, but man, it's a nice little move there for SLVM. Gonna have to be one that I'll keep on my radar. It looks like it's trying to get to 39. Never looked at this stock before, but something I might start looking at. All right, technology, the next one, right? And we talked about the semis that are already kind of getting some lift, but what's doing bad here? Solar. Solar is holding back technology a little bit today as solar just came off the tape. ENPH down 10%. I feel like if it can close 255, that's not really the worst move. But man, what a flip there in solar today. And look at FSLR. not doing too much better, right? These have been the leaders here. Let's take a look there, down about 5%, but holding the throwback. So that's a good outlook. If it can hold here around the 134.86, really kind of close back towards 135, hold this, it still could come right back towards the 145. We'll see what happens in these solar names. All right, let's go ahead. I'll take a look at what was down. Real estate getting hit. Utilities continuing to fall. So in the XLU, looks like it doesn't want to come back in the channel. It tried. It hasn't really broken through. Breakdown through, let's say 66. I'll forget about these stocks. But for right now, they are still trying to pull back, trying to find the bounce. We'll see if they ever can actually catch that bounce. NEEE is another one to kind of watch. NextEra Energy, right? The leading capitalization here. Still not doing the best move here. So we'll see what happens. All right, defensive names down also. Just keep watch on those. Even value getting sold off recently. So you got to be careful. All right, let's go ahead. Let's keep going. What other ones are making moves? Let's take a look at what you guys are checking on out. I do see some stocks in the chat. I'm going to go ahead and get through them now. All right, let's take first one up. Nike, says Ravi. Let's take a look at Nike. Nike making up some of that shadow fill. Will it get all the way back up there? Who knows? But not a bad move after that down move in Nike. It went sideways for a day. Sideways for about 2 days, then really started taking off with the market coming back. We'll see if it can get back all the way up there to 93 and 94, but not a bad one to keep on watch. Foot Locker, what's going on with Foot Locker? Did we finally get a little bit of a bounce? It looks like we're finding a little bounce at around the 32. We'll see if it can get back towards the 35, 36. And I'd do that by just watching Nike just to make its way back in the shadow. If that happens, you'll probably see Foot Locker kind of get a little bit of a push. All right, let's go. Amazon, no more hiring for the rest of the year. Well, doesn't look like you're going to have the best holiday season. That's what that tells me. That shows me that Santa Claus is bringing coal this year, Jay. He's bringing it. We'll see what happens on Amazon as it's battling. And one of the things about on Amazon chart that I see often is a lot of gaps. A lot of gaps with Amazon. So you got to be careful with those gaps. You have to understand that the stock can gap the next day. And so that's a big amount of risk, right? Amazon moving from around 112s, 113s, all the way up there towards 122. That's a 7% move. Amazon has a tendency of moving pretty fast in about 3 to 4 days, especially since the stock split. Chewy. Let's take a look there. Chewy was a chart that surprised me today. Definitely looked like a really nice pattern. Man, I wish I would have played this one. I called this one out on live trading. I was looking at it. It looked beautiful right about here. This is when I called it out. And I said that as long as they hold support now, you're looking good. You still got that move up above the VWAP, and then it came back right to support, then took off like a rocket there. Not a bad trade there in Chewy. Did you guys see news on this one? I was looking for it. I couldn't find it, but let me take a quick look in my pro to see if I have anything else that maybe I didn't catch here. So let's go towards here. Let's take a look at Chewy. Chewy gains suggesting stronger than expected Q3 sales. I don't know. That seems like a little fluff piece, but we'll see what happens. It definitely is pushing up there. Now went up there towards 36.50. So good bounce back there in Chewy today. Of course, this one sold off recently when Ryan Cohen started making too much talk about Triple BY. So who knows? Maybe this can come back. All right, I do see another one. Maybe Chewy is hiring Amazon layoffs. It could be true. Let's take a look here. What else ones you guys have? Aaron Bryan, first year you want coal in your stocking. Yeah. Especially our hookah users out there. I'm sure those coals have gotten more expensive for those hookahs as Europe looks to use coal this year, not for the hookahs, but to keep the furnaces on. So we'll see what happens there. Kit, the next one to take a look at. Kit in our All right, so this one's a little bit of a reach. It looks like a robotics company here. I don't know anything about kit, so I need to do a little research. I'll be honest. You guys will hear me always try to be transparent with you. If I know a stock, I'm going to tell you. I don't know this one, kit. I need to do a little bit of research. The only thing that I could give you is the pattern that I see. Purely technicals. Like always, guys, full disclosure, not in this name, just calling it how I see it. Really nice little setup here. Got a what? Higher lows, kind of wedge coming in here. Up 1, down 1, up 2, down 2, up 3, down 3. Now should hold here. This low shouldn't break that 527, and we should look for a nice little break back to the resistance. First stop. I'd look at right about here around the 87,590 area. And then you're looking for that $6. Once you get that $6 push, we'd look for a nice little push towards the 625. And this is purely based on technicals. I don't know anything about the stock, so I'm not going to go ahead and tell you about it and act like I do. But it's a nice stock. Leading gapper this morning. Thank you, crypto, for at least mentioning it. I'm going to take a look into it. It definitely needs to be kind of a stock that I need to look into the story. But right now, it's not looking too bad. Held the first pullback. Look at that support action that you got here. Resistance sometimes becomes support. Clearly helped there at that $5 price point to find support. Got some wicks there, and wicks will be tricks. But we're looking to see a close up towards the 590s. That would give it that nice little lift. And the stock doesn't look bad at all, even on the 5-minute in a shorter time frame, looking at it here. And one thing to note also, 3 or 4 price actions below the VWAP. It's not a bad thing to look for. And you're getting it here in this stock also. You get about this price action right here on this first pullback below it, second pullback, third pullback, and now it starts holding VWAP. I would want it to hold VWAP on pullbacks here. Like you got right above, once you get above that VWAP and you get this last support try, you want it to see it do this move right here, where it went up above the VWAP and it didn't go even a cent down below that VWAP. Now it's looking like it wants to get that nice little push up. We'll see if it gets that little lift there in KIT. Not a bad stock you guys are watching. I see you guys, multiple. All right, we'll see what else is moving out there. Not a bad play there, and you guys would see how I would try to get this KIT stock, but let's leave it alone. Let's take a look at the overall market, see what we're doing. Will we get back to that 378? What's going on with the oil stocks? Just ripping and ripping. Did we get to the 100? 99.99. Can you believe it? XOM hit 99.99. That's incredible. And it also hit it here. So what does that show me? There's probably a seller up there, a little sneaky seller. Like, I'll take 100. I'll get out on this trade. Well, we'll see what happens out there. Was that the 5-minute chart on KIT? That was the 15-minute, and then I went to the 5. So I'll show you it again. The 15-minute is usually what I use to determine kind of bigger trends, and then I'll work my way backwards towards the 5. And then that's the 5 is where you're going to see kind of more of the VWAP hold there. On the 15-minute, you're not going to really see that kind of action too much. It's going to look really tight, but this is the 15-minute. And when you go to the 5, it looks clear. So multi-time frames, right? That's always helping. Another thing you can use is the hourly level. Look at the hourly chart. A push back through this hourly level could give us a nice little lift also, which is 577. And so you're starting to line up with multi-time frames. So multiple traders, the ones that use the hourly, the 15 and the 5, all looking for similar levels for it to keep giving that push. Tesla moving, says Andrew. I'll take a look at Tesla. Is it starting to get that bounce? Yeah, it is. It is getting a little bit of a bounce. It got back above the VWAP. Now the question is, will it just crack through the VWAP and just come right back down? That's the hard part here. One thing that I would use is that first little pop. I would use a trend line towards what you're seeing right now. So that this brings us right towards this level where now if it can get back above the 240s, it won't look bad for a bullish move. But if it rejects here, gets back below the VWAP, that's easily how you get right back to the low of the day. We'll see what else is going on out there. All right, that's it for me, guys. I'm going to wrap up little bit early today. I didn't have too much to get into. And to tell you the truth, there isn't much kind of stock-specific news out there right now. It's been all about correlation with the overall market. So what do we kind of keep our eyes on moving forward, right? Well, we need to keep our eyes on unemployment. We need to keep our eyes on the dollar index. That gave us a good sign today that we would continue to kind of start turning around there after that 1030. And if you take a look at it, the dollar index went up to a high of around 111.58, and now we're towards 111.30s. Let's see if we take out that high again towards the end of the day, and that would cause another push down in the market. Of course, you could also watch the bonds or make it easy on yourself. You can just look at the TLT. When the TLT is going to be up, probably going to get that down move, right? And so the TLT has been really kind of one of the easiest ways to kind of catch it right now as we started getting up. And then look how this decline came in. It just doesn't want to hold right now. And if it comes down, it's probably going to pull us down also here. SPY is starting to show some topping around the 377. It's a tough market right now. I think that there's too many people trying to call long-term bottoms, even though we're only seeing days of rallying and we're really not getting out of any headwind. If there was some truly positive catalyst out there in the market, then I would be with the calling of the bottom. But the truth is, there isn't one. If anything, there was negative that we saw around there. But what they were trying to point to was that the negative news of financial instability in Europe was going to take charge over what the Fed was going to do. And so at this point, would I expect the Fed to kind of flip because of instability in Europe? No. The Fed will go ahead and kind of keep watch what happens here. What happens here is more important what happens across the pond. Same way that they're going to be battling and OPEC is battling with the U.S. because what? The U.S. wants oil prices down so that the midterms look a little bit better for the Democrats. Yet OPEC is worried about prices, right? They determine the price. They're not worried about what the U.S. wants for their midterms. They're worried about price, making money. Like always, guys, there's always going to be kind of agendas that you need to look at to see if they kind of fall in line. See if the fiscal and monetary policy are changing. That's one of the things that I learned in school to pay attention to. When fiscal policy changes or monetary policy changes, these are huge events for investments. And until you see a change in the Fed, I'm going to still stick with Ned Davis's quote, you don't fight the Fed and you don't fight the tape. So right now, it's a tough block because you're seeing 2 days up, sideways action. We can still get a little bit of a push. You can get towards that 385. But do I see much higher than that? Not in the long run. We'll see what happens. And like always, keep your eyes on what happens out there because a lot of these are giving us symbols and we need to keep watch to kind of catch these symbols. And I mean, it was kind of an easy look. The dollar turned around, boom, the market started going back up. So keep your eyes on these kind of indicators to watch what happens in the U.S. equity. It's been working. And until it doesn't, where we get maybe like a day where the dollar is green on the day and yet the SPY closes green, that's something that I'm going to be watching towards the close. What happens there? That's something to keep an eye out for. All right, I'll see you next time. And a little bit later on at the close, I don't have Joel Elconin, so it's going to be a little bit harder to do at the close. But if you guys want to come on over, take a look at some stocks. We'll go through some ticker time extended. And of course, I can take a look how I just did on KITT, K-I-T-T, and breaking down the strategies that I would take to kind of trade these stocks. We'll see what happens. Like always, hit the thumbs on up. I'll see you next time on Stock Market Movers. I'm Money Mitch, and let's keep going right here on Benzinga.